Hope you're all keeping safe. On behalf of CAT8, I would like to welcome you all to the second webinar entitled Mortgages and Protection Insurance. Before we start, I would like to run through some housekeeping points. Please ensure that your mute button is on at all times. The format of the webinar will be a presentation followed by a question and answer session by a panel. If you have any questions, please send your question using the chat box at the bottom of your screen. Nirmal, Kilit, and I will be moderating and will pass the questions on to the panel. Please note that the content of the webinar is for information purposes only. Specific advice should be sought from your personal professional advisors. The webinar is being recorded and will be put on YouTube. All attendees will also be receiving an email asking for feedback, so please provide feedback. Okay, so the community assistance team, who are CAT8.
We are the CAT8, also known as the Community Assistance Team 8.
Is a group of Jain individuals and professionals
who are assisting the community at large
during the COVID-19 crisis.
CAT8 began just before the COVID-19 crisis,
when it held a CAN challenge,
where children created iconic monuments
using cans of food,
raised some 3 tons of canned foods,
enough supply for 4 months,
for the Watford Food Bank,
run by the Trussell Trust.
During the COVID-19 crisis,
CAT8 is helping the elderly, the vulnerable,
those in isolation and key workers.
With meals, essential shopping,
help with medicine collection,
and someone to talk to
whilst coping with isolation.
CAT8 has lined up
a series of webinars.
In addition, we have created a helpline
for individuals and businesses
that need guidance
on the various government schemes
and the topics of the webinars.
CAT8 is working with
or supporting various organizations,
including Go Dharmic,
Sevate,
Navnath,
SCVP,
One Jain,
the Trussell Trust,
and working with many volunteers.
CAT8 is the newest network fiber,
connecting the community. In addition, CAT8 is very kindly supported by a number of businesses who make the work of CAT8 possible. So now for tonight's talk. As mentioned, it is on mortgages and protection insurance. And our speaker is Ashit Shah, who is a financial advisor with AWS Advice. He's a highly experienced business leader with a background of over 25 years in management roles across the retail and financial services sectors. Ashit joined AWS Advice in October 2019, bringing with him a wealth of varied experience. So from a strong accountancy background to banking experience, to working as a financial advisor, to running his own business, cake shops, and now making a comeback to financial services. Ashit is a fellow of the Association of Chartered Certified Accountants. He also holds the Chartered Insurance Institute's Financial Planning Certificate and Mortgage Advice qualification, and is currently licensed to provide mortgage and protection advice. He is also currently pursuing the Chartered Insurance Institute's diploma in regulated financial planning. So I'm going to hand over to Ashit Shah. Thank you, Ashit.
Thank you, Rumit. A very warm welcome and thank you to everyone that has joined us today for this webinar. I trust everyone is keeping well and safe. Thank you to the CAT8 team for facilitating this series of webinars covering some important topics which are relevant to our daily lives. This webinar is not about me, it's about you. I hope at the end you can all take away some important points from this webinar. The agenda of today's presentation is that I'm going to talk about mortgages and protection, especially during the COVID-19 situation. For mortgages, I will talk briefly about mortgage market in the UK, followed by pre-COVID-19 market conditions, and end with post-lockdown and current market conditions, and a few tips. For protection, I will cover a brief outline of the protection market, followed by post-lockdown market conditions, and end with the importance of staying protected and a few tips. We will end the session with some questions and answers. We will try and answer as many as we can. However, if the questions are relating to a specific personal situation, we suggest you get in touch personally through the CAT8 team helpline, details of which will be provided at the end of the presentation. Right, let's begin with mortgages. Let me begin with a brief outline of the UK mortgage market. I'm sure most of you are familiar with the mortgage market in the UK and how it works. So I'm only going to talk very briefly about it. Buying a property for many will be the biggest financial decision you will ever make in your life. Both your income and outgoings will make a difference to the mortgage products that meet your requirements. The types of mortgages: before you choose a specific deal, you need to decide what type of mortgage is the most appropriate for your needs. Types of mortgages available are variable rate, tracker rate, flexible mortgages, offset mortgages, discounted rates, fixed rates, and government-backed schemes. There are two types of repayment methods: capital repayment and interest only, or a combination of the two. Some of the costs involved in buying a property include stamp duty, valuation fees, legal costs, lender's arrangement fees, deeds release fees, and mortgage broker fees. In terms of protecting your investment, i.e. the property you buy, some of the costs involved include buildings insurance, contents insurance, life insurance, critical illness cover, income protection, landlord's insurance for buy-to-let properties. So that's a brief overview of how the mortgage market in the UK works. Next, I'll cover the pre-COVID-19 market conditions. There is no doubt that the size and shape of the mortgage market has changed considerably over the last decade, since the global financial crisis. The crisis led to significant changes in conduct and prudential rules, designed to protect the borrowers and firms from the risk of any future downturn or similar economic shock. At the same time, we've seen significant government intervention in the market to stimulate new home building and support first-time buyers, particularly through the Help to Buy equity loan scheme. Housing sales had plateaued over the last 3 years and were starting to slowly decline. The mix of home purchasers has shifted over the last decade, with first-time buyers the largest buyer group. Tax and regulatory changes introduced between 2014 and 2016 have impacted the buy-to-let mortgage market. However, lenders' risk appetite for mortgages has slowly recovered. The availability, choice, and pricing of mortgages for existing and new customers has increased, including more of 90% plus loan to value deals. What a start to this year the housing market had. With positivity so strong, it stood a chance of lasting the full 12 months, if not more. The year-on-year increase in values and transactions indicated that buyers and sellers had got over Brexit and were getting on with their lives. Of course, coronavirus had its own agenda and has now cast a very dark shadow over the property market and the wider economy. So moving on, now let me look at post-lockdown and current market conditions, where I want to spend a little bit more time. The UK's mortgage market has changed profoundly in the last 6 weeks as the full effect of the coronavirus has started to be felt. Lenders have been told to allow repayment holidays. Moving home is virtually banned, leaving swathes of homeowners in limbo. Thousands of mortgage products have been withdrawn, and the bank base rate has been reduced to an all-time low of 0.1%. I just want to show you two graphs. The first is that of the history of Bank of England's base rate over the last 50 years. As you can see, over the last 50 years, we are at an all-time low of 0.1%, with the highest at 17% around 1979/80. I'm sure some of you may remember those days. The second graph shows the difference between the base rate and a bank's standard variable rate. The black line is the base rate over a 10-year period, and the orange line is the bank's standard variable rate over a similar 10-year period. This shows that the banks tend to follow the base rate, but from 2009, just after the financial crisis, there was a big gap between the bank's standard variable rate and the base rate. Commercial banks didn't pass the full base rate cut onto their customers. This is a bit of an old data, but it is still valid today. The current base rate is 0.1%, whereas the average lender's standard variable rate is at around 4 to 5%, a big variance. To hopefully help put your mind at ease and to perhaps save you some additional time looking for answers elsewhere, I wanted to try and answer some of the most common questions many of my clients are asking during COVID-19. Firstly, I've exchanged on a new property but not moved in. What should I do? The government has stated that they do not want you to move during the lockdown unless it is in exceptional circumstances. If you can therefore delay your move, then you should. Mortgage lenders are now extending the expiry dates on offers by 3 months to hopefully allow for more time, whilst many solicitors are adding new clauses into contracts in case purchases don't progress. Secondly, I have completed on a new property but not moved in. What should I do? As with exchanges, the government is requesting that moves don't occur unless there is no option. If you do have to move, then take extra precaution to adhere to the social distancing rules. Next, can I qualify for a repayment holiday? All lenders are required by the government to offer borrowers the opportunity to take a 3-month payment holiday. This is true for all homeowners, buy-to-let mortgages, and for clients who have used the government's Help to Buy scheme. Repayment holiday is available to borrowers who are up to date on their mortgage payments and are not already in arrears. However, some lenders are allowing payment holidays for people who are in arrears on their mortgage payments. For example, Santander. I'm a limited company. Can I apply for a mortgage holiday? Yes. UK Finance, which represents the banking industry, has confirmed that the payment holiday for buy-to-let landlords will also apply to those who have mortgages through limited companies. Next, should I take a repayment holiday? A mortgage payment holiday is a break from paying your mortgage. It won't affect your credit rating, so that's one thing less to worry about. You can ask or take a break of up to 3 months if you have been impacted through coronavirus. We believe that over 1.6 million borrowers, that's approximately 1 in 7 mortgages, have already requested a holiday. And if you are in a position where you will struggle to meet your monthly mortgage payments, then it is a sensible thing to do. You won't need to go through a means test or demonstrate your income drop, and there is no fee to pay. However, I would stress that this is not free money, that you will need to make up missed payments in due course. Instead, at the end of the 3-month holiday, you will need to agree higher payments moving forward with your lender or extend the term of your mortgage. As such, taking holidays will cost you more in the long term anyway. My view, therefore, would be not to take a holiday unless you really need to. You can apply for payment holidays online through most lenders' websites or over the phone. Also, if you're coming to an end of an existing mortgage deal, then be aware that taking a payment holiday could impact on whether or not you can qualify for a remortgage or a new deal with your existing lender. Some lenders are not allowing clients to remortgage or do a product transfer whilst they're in the middle of a payment holiday, although many lenders have now started allowing that. I would suggest take advice from a qualified advisor or talk to your lender at the earliest opportunity. Next, it is important that you do not cancel your direct debit to the lender. I repeat, please do not cancel your direct debit. Simply canceling the direct debit may cause issues later down the line when you come to the end of the payment holiday and could cause you to miss a mortgage payment in future. Missed mortgage payment will show on your credit file. The lender will automatically stop taking the direct debit for the 3 months and then resume thereafter. I can't get through to my lender. What should I do? I mean, it's the same case for us mortgage brokers as well. All the lenders have been swamped with calls from borrowers about payment holidays at a time when they were trying to move significant numbers of staff to remote working. Many have consequently struggled to cope, leading to long waiting times. I would therefore encourage you to wait a few days for things to quieten down and try again, or alternatively, look on the lender's website. Most have detailed information on their response to COVID-19 and how to request a payment holiday. And with a lot of lenders, you can apply online. Next, I'm coming to an end of my current mortgage deal. Should I remortgage? A significant number of products, particularly tracker rates and those at higher loan to values, have been withdrawn by the lenders in recent days. Hopefully, this is a temporary measure while lenders reassess risk in this area of the market and work out what will be possible for them to offer while the current restrictions are in place. With so much uncertainty at the moment, providers seem to be focusing on supporting their existing customers in the coming weeks. However, over 10,000 products are still available and rates remain at historically very competitive levels. Funding may become more constrained in the future. So if you're within a 6 month from your end of your current deal, please get in touch with an advisor and I'm sure they will be able to help you. Next, my income has dropped. How will this impact on my ability to get a mortgage? All lenders look at your current income and any expected or known changes when they assess whether you can afford a mortgage. For furloughed employees, most lenders are currently only able to consider furloughed income and any top-ups done by the employer, a confirmation of which will be required from the employer. So basically, they will assess affordability based on 80% of your basic income up to a maximum of £30,000 per annum gross. For the self-employed, most lenders will want to see the latest 3 months trading bank statements in addition to the last 2 years trading accounts. Most lenders are currently not considering bonuses, overtime, and commissions unless you are an NHS staff. Although this is a temporary change, this makes it difficult if you have a large mortgage and are coming to an end of your current product rate, especially if you've been furloughed. One option is to remain with your existing lender and go on the best deal that they currently have. This can either be arranged through a broker or directly with your current lender. Most brokers do not charge for doing this. I suggest you talk to a mortgage advisor in any case, as they may be able to help you find a mortgage that's right for you and that is affordable based on your income and expenditure. Next, I'm looking to buy a property. Should I continue? The number of property transactions are dropping fast, and we expect the market to be in a state of suspended animation for at least the next 2 or 3 months. As such, if you wanted to make a purchase, it would be very difficult unless it was a property you already knew and therefore didn't need a survey and were buying with cash only. Physical valuations are not happening due to the social distancing rules by the government. This has led to a lot of lenders restricting borrowing to 60% loan to value, whereby they would then do a desktop valuation or rely on automated valuations based on historic and online data. In recent weeks, many lenders have started offering higher loan to values products, for example, up to 75 and 85%. However, limiting the maximum loan you can borrow to up to £350,000 only. Currently, most lenders are able to do a desktop or automated valuations for standard construction properties, for example, a standard house or a purpose-built flat. They are unable to process any applications where the property is of an unusual nature. For example, non-standard construction or houses in multiple occupancy, HMOs, or new builds where a physical valuation is required. Next, what if my chain has broken? One of the unavoidable effects or side effects of pausing the entire property market will be the breaking of many housing chains. Some homeowners are already deciding they no longer want to sell in the current circumstances, causing headaches for others in their chain, some of whom have exchange contracts while others in the chain have not. In many cases, chains may break from the bottom as first-time buyers pull out. The stock market crash has dented many help-to-buy ISAs and lifetime ISAs. Buyers have been saving for their house deposits. And lenders' criteria has also tightened up in the face of the crisis. Against that, interest rates are now at an all-time low. So once the lockdown is over, it can be hoped that other first-time buyers will be there waiting to fill the gaps and repair some of the broken housing chains. Lastly, what is the position on repossessions? If you have not been or are unable to make payments, then following government intervention, mortgage lenders have suspended possession orders and will not start any court action for at least 3 months. Next, let me look at some frequently asked questions specifically relating to the buy-to-let mortgages. Firstly, government action. The government have introduced the Coronavirus Act 2020, which establishes a set of guidelines for tenants and landlords to follow. They have stated that there is no one-size-fits-all approach to dealing with specific landlord-tenant situations, and that frank and honest conversations are needed to come to an amicable solution. The government has also announced the extension of the provision of 3-month mortgage payment holidays to include buy-to-let mortgages, as mentioned earlier. Product availability. There have been a noticeable decrease in the availability of mortgage products over the past 6 weeks, particularly those designed to support more specialist requirements, including buy-to-lets. In some cases, lenders have chosen to withdraw buy-to-let products altogether or to cap the loan-to-value that they're willing to lend up to. The key challenge for the lenders is the suspension of the ability to undertake any physical valuations of property at the moment. However, an increasing number of lenders are moving rapidly to offering desktop valuations involving a valuer assessing the property using online historic data. We are already seeing the results of this move with more higher loan-to-value products starting to emerge. This trend will continue over the coming weeks, which should help ensure more products become available. Next, my tenant can't pay their rent. What should I do? Responsibility falls onto the landlord to reach out to their tenants to establish whether they're under financial strain and therefore unable to pay their rent. Landlords are encouraged to show compassion to their tenants and help them to remain in their homes. Both are encouraged to come up with a repayment plan. Both the Building Societies Association and UK Finance have announced that there will be no repossession actions taking place for the next 90 days. This applies to homeowners and landlords. In addition, tenants cannot be evicted from their home over the next 3 months. Lastly, can I also claim for a mortgage holiday even if my tenant is still paying their rent? Those tenants who can still pay their rent should continue to do so as normal. If your tenant is still paying their rent, but your main source of income from a full or a part-time job has stopped and you are unable to pay your mortgage or outgoings, then you are able to apply for a mortgage holiday. This is my favorite section. Let me go to some tips. My biggest tip would be to have your mortgage reviewed if you're currently on the lender's standard variable rate. With fixed rates and tracker rates at historic lows, it should be possible to pick up a much more competitive mortgage to save money. Check your mortgage offers now. If your fixed rate is ending within the next 6 months, then I suggest you immediately contact a mortgage advisor who would be able to help you source a better deal and advise appropriately. Again, check your mortgage offers now. If your income has dropped due to coronavirus or otherwise, and you're coming to an end of your fixed rate and you cannot remortgage to a new lender, then you can still do a product transfer to another competitive deal available with your existing lender. Don't let your mortgage revert to the bank's standard variable rate, which is much higher. Talk to your lender or a mortgage advisor. With savings rate at rock bottom, if you can overpay on your mortgage, then do that subject to the lender allowing that. Most lenders now allow you to overpay up to 10% of your mortgage per annum. You can save a lot of interest in the long run and pay off your mortgage much earlier than the original term. Please remember to ensure you have sufficient emergency funds set aside before you start overpaying. Lastly, make sure you don't cancel your direct debit if taking a payment holiday. The lender will pause your payments and restart after 3 months. To summarize, we are in unprecedented times and uncharted territory in the mortgage market, and with the lowest base rate in history, property market in virtual lockdown, moving house is virtually banned, lenders restricting lending to 60%, physical valuations not happening, and lenders offering payment holidays. However, in recent weeks, we have seen the mortgage market opening a little bit, with many lenders increasing their product offering, willing to lend up to 75 and 85%, and more automated valuations taking place. Just today, one of the high street lenders has said they're willing to look up to 90% lending. It is a very fluid situation in the mortgage market, with changes happening every day and lenders having to find ways of keeping the mortgage market flowing. We can only guess and be hopeful at this moment what the other side of lockdown would look like in the property market. Meanwhile, buyers and sellers across the nation will just have to sit tight, wait and see. If you're looking for a mortgage or a remortgage, a good broker is worth their weight in gold, especially now. Before I move on to protection, I would like to share a quote from Maximus the Gladiator. Whatever comes out of these gates, we've got a better chance of survival if we work together. Do you understand? If we stay together, we survive.